Hello, everyone. This is Mubariz Siddiqui. I am currently the General Counsel of Sarmayacar. I'm also a legal practitioner working in Pakistan, advising startups and investors. I am here joined with an eminent panel of investors who focus on both Pakistan and regional markets within the region. Let me just start by introducing our panelists. The first person, in no particular order, Beau Seil. He is currently the co-founder and the partner at Patamar Capital. We have Mehboob, who is the managing director of Sindh Enterprise Development Fund. Misbah Naqvi, who is the co-founder and the general partner at I2I Ventures. Faisal Chowdhry, who is working at Goldman Sachs and looks after investments in Fintech. And lastly, Faisal Aftab, who is a general partner at Lakson Investments VC. The topic that we're trying to discuss today and shed light on is to get a better sense of the fintech landscape in Pakistan. What is it and how does it compare to the regional markets? We also want to get a better sense of why have fintechs not been adopted in Pakistan, or we've seen a lower adoption of financial technology services and products in Pakistan, along with what needs to change. So starting right off, I would like to direct this first question to Misbah and to get a better sense of why, in your opinion, do you feel that fintech products and services haven't really picked up in Pakistan as yet? Misbah, you're on mute.
Of course I was. Thanks, and great to be here with everybody this morning. So I think, as somebody who's been in the finance space for the last 22 years, now you know how old I am, and actually been on the banking side as well as and actually been in a fintech startup myself, and now on the investing side, I've really seen the space evolve over the last few years, and I think what has held us back keeps changing. So I think at one time it was a regulatory regime which was very sort of strict and not necessarily very conducive to new ideas. That has improved over time. I think there's still it's a heavily regulated space, but that's the nature of the space as well. At some point, it'll open up more, but it'll continue to need to be regulated. And I think now it's a matter of both the customer adoption and the customer exposure and the demand, as well as the facilitation from the government side. So I think at this stage, it's both a push and a pull, which is what has been missing in the market. So I think opening up of the regulatory landscape is starting to happen. We see that with the SECP sandbox for non-banking financial institutions, which actually have an opportunity to get into things like insurtech, P2P payments, etc. And we see the State Bank coming up with a little bit more of opportunities for smaller companies to obtain licenses. It's still a relatively complicated structure. It still requires a minimum amount of investment, and so from that perspective, it ends up being a bit of a chicken and an egg. If you have potential investors who want to support your fintech idea, you will actually give them comfort if you have a license. However, in order to apply for the license, you need to have a minimum amount of paid up capital. And so we keep going around a little bit in circles where there's this sort of sweet spot where you have commitments, but you don't have the money in the door. You're working towards a license, and you may sort of be working on a few things in parallel. So I think the regulatory structure has been one so far, but it is changing, and we'll come to that more a little bit, I guess, later in the talk. I think the other aspect is also on the pull side, and I think exposure to what could be is something that's been missing in the Pakistan market. People just go along with, this is what we have, and you've actually been spoiled. In fact, rather than being spoiled for choice, we've been beaten into knowing that there is no other better way to do things. And so I think as the exposure to other markets and what's happening in other markets starts increasing, we're already starting to see that. There's going to be a pull and a demand, which is also going to drive more sort of potential solutions for the Pakistan space. We've already seen a bit of that happening in this COVID year, with tech adoption increasing. And I think, as all the things are coming into place now, is going to get even better next year. And we'll talk a little bit more about what it's going to look like going forward.
That's an interesting take, the demand and pull aspect, Misbah. But I would like to now move on to Faisal Aftab, who is also someone who understands the space well and has been operating as an investor in Pakistan for some time now. Faisal, building on what Misbah said regarding the barriers being regulatory and the adoption piece, we'll talk about the regulatory piece further down. But from an adoption perspective, what do you think were the main barriers which prevented or are preventing some of these fintech applications to be picked up by and be used by the users?
Sure. Thank you, Mubariz. Can you guys hear me, by the way? I hope I'm not on mute. Okay. Excellent. So, yeah, I mean, I agree with Misbah on the regulatory side, and obviously all those are issues, paid up capital requirements and everything. But I look at it from a slightly different lens of in terms of total addressable market. And so, you know, and I've mentioned this in other panels, when we look at Pakistan, it's a bit of an anomaly where 3G and 4G essentially launched with almost a 5-year lag. And that created the total addressable market was very small. And the reason why I keep mentioning 3G and 4G, again, compared to India and the entire region, with 3G and 4G launched in 2006 and 11, 12 respectively, and Pakistan we launched in 2014 and 15. So for your general population, they can't afford laptops or desktops. So really seeding of smartphones is dependent on 3G and 4G. And so I think if you look at 2015, we had about close to 20 million odd internet users. That number today is 80 million plus, and 96% are coming from smartphone users. And those are, those are one of the key components of fintech adoption, especially at a mass scale, right? So I think that's one of the reasons why you haven't seen adoption at that same level. Of course, you've got Easy Pesa, Jazz Cash, the mobile wallets. You've got HPL and everybody active in the last year or so. But the reality is that, you know, it's just very basic utility payments. I mean, this stuff was being done abroad for decades. So it's nothing like phenomenal in terms of actual lending, microfinance lending. And again, the data rails for that, I think, have been put in place in the last 24 to 36 months, where you're seeing basically more e-commerce activity and for the algorithm itself, for the decision-making engine, the data rails, I think, probably in 2021 will become sufficient. And 2021, we will start to see these platforms come in and actually have some sort of a use case. So just my 2 cents there.
No, that's very helpful. And I think you make a very interesting point regarding how a lot of Pakistanis just got the internet over the last 4 years, or at least have had access to the internet last 4 years. But before moving on to the opportunity piece, what I want to better understand from Beau and Faisal Chowdhry is how given their regional experience investing in similar products, how does Pakistan compare for them, and how are other markets that they've seen that were similar to Pakistan and how they changed, and maybe some examples from Africa if that's helpful. So starting with Beau and then Faisal Chowdhry, you can also add in. I'm sorry, I'm taking your full name because we have 2 Faisals on the panel.
No worries. Yeah, no, I think it's a great question. I think that what we've seen happen in other markets is typically once you've got, as Faisal was talking a little bit about and also with Misbah talking about, once you get beyond this regulatory framework challenges and paid up capital requirements, you start to typically see more traditional lending models on the tech side, which have a playbook in other markets. And so, one of the things I found actually quite fascinating when I went out with a couple of fintech companies in Pakistan out to meet with shopkeepers, one of the interesting things that jumped out at me is a lot of people were looking for Sharia compliant products. And I don't think that there's a tremendous number of, highly scalable products that have gone out in other markets that have really, captured the world's attention. So I think that from an external investor perspective, typically when a new sector launches in a country that's maybe not on the top of the list on the investment side, they're not looking for new models. They're looking for good founders with a playbook in another market, and all we need to do is just go in and build something. So that's a question I actually have for the panel is, how has that potentially kept some things behind? But I think the bigger challenges have been more on the regulatory side to date, and actually the lack of flow of investor capital into Pakistan. So I think that once you get that virtuous cycle going, there's some things that will happen. In Indonesia, I think that everybody looks at Indonesia and thinks, oh, wow, it's so far ahead, but I remember being quite frustrated for quite a long time in Indonesia that the regulatory, the financial regulators were just not easing up. And, it wasn't until actually they started to allow, P2P, so peer-to-peer lending, that kind of this whole thing started to explode. And the next challenge became a lot of these peer-to-peer lending companies, didn't have tremendous amounts of financial expertise in some of the markets that we invest into in Southeast Asia. So you had a bunch of entrepreneurs who were literally lending to actually learn how to evaluate credit, which I think is another scary thing. And we can talk about whether, the regulators are being too stiff in Pakistan or, need to loosen up, or, I think that that's up for debate, because you could see really quickly that, some massive collapses of fintech players could actually set the market back a long ways, especially if the government is, really trying to protect people. So I think that it's, entrepreneurs oftentimes get super frustrated, but they don't have to protect the entire financial market. And when you start dealing around with people's lives and their financial lives, there are really large consequences there. So it takes a lot of, a nice dance between, the fintech community, the banking community, and the regulators to really build the right types of systems, licenses, and get people comfortable with actually investing in those things. One of the other things, though, is, we've seen in some other markets, like in India, for a long time, the protection mechanisms were essentially just trying to protect incumbent banks. And if that's a part of the ecosystem in Pakistan, where you're essentially trying to protect the existing banks, and the banks are leveraging a lot of pressure. We've seen this in Indonesia. We've seen that, we had a company that did over 95% of a mobile banking pilot, and there were 4 other large institutions involved. They did 95% of all the transactions, and they didn't get the mobile banking license, right? Like, which made no sense, right? So you deal with a lot of those sorts of things. So, in a nutshell, I think there'll be some regulatory things that loosen up. I think that then, there needs to be that nice dance between the regulators and the fintech community to be very realistic and not just take more of a techno-libertarian streak of, I just want to build a company, so just let me build a company. Why are you so stodgy? We are dealing with a highly regulated industry. And in some countries, you've had loose regulations which have resulted in collapses, which then those collapses have created massive panics and created, overarching regulations. Like in India, when you had the microfinance crisis in Andhra Pradesh, like if there had been a national set of regulations that governed how microfinance was done, you would have never fallen into that sort of a situation, or it would have been reduced pretty significantly. So I'm very optimistic about where Pakistan is. I think, with the national ID card scenario, there's a lot of ways that the country can actually move quite quickly. It's just going to be how quickly does that dance between the regulators and the business community really work out.
Just picking up where kind of Beau left off there on the regulatory side, I think, regulation is interesting. I know everyone likes to, blame the regulator to some extent, but, regulation is important. And I think the sophistication of the regulator will increase over time as well, right? So going from more prudential regulation to conduct regulation, I think is going to happen over time, particularly as you get more and more sophisticated fintechs on the scene. But I think the other point that Beau mentioned as well, which is, I think there's more of a cultural question here as well, right? In terms of, we're asking people to actually take on a service that they might not even interact with even offline, right? And so there's 2 leapfrog events there, right? There's kind of like, okay, adopt technology, and then by the way, trust someone else with your financial life as well, which is not necessarily a part of their current modus operandi, right? And so how do you also educate people to say, look, if you take on these services or if you use these services, there's actually a benefit to you and your family, there's a benefit to your business or whatever it is you're using the service for. I think that is a key question that still hasn't been answered. And I think the difference we see, like maybe in Africa and in other kind of regional jurisdictions, is there's been some macro event that sometimes has caused that early adoption. So for example, if you look at Somalia, for example, right? Mobile money is doing fantastic, not because everyone's like, yeah, fintech, like that's the way to go forward. But it's kind of like there's no cash in the system, right? And so you have to use mobile money. And so in Pakistan, in some ways, has to educate people in terms of why finance is important. How does finance become a service? I think that's super important. I think the other thing is, and I think it's another topic as part of this panel, is that how do fintechs better interact with the incumbents, right? How do they build those relationships so that they can get onto the rails that they need to in order to deliver those services to people as well? So I think those are the kind of the points I would highlight.
That's actually very important, and I think you've hit the nail on the head when you talk about the fact that we actually need to be solving problems, and no one's going to adopt fintech for the sake of adopting fintech, of course. But the one point you made, Faisal, was regarding whether people are already using those services offline, and I think that is heavily dependent on whether the incumbents are in some way or the other offering those services online. So, for example, when you talk about invoice discounting, the incumbent banks are actually pretty bad at offering those kind of services, or at least to a large segment of SMEs. Mehboob, before we move on to the opportunity piece, again, I wanted to, since I know Sindh Enterprise Development Fund has been working with some banks and some incumbent banks, and has had some challenges. I know we have had this discussion and have had some challenges where the incumbent banks haven't been able to support. So if you could just shed some light on that and to give us some color around your experience around working with incumbents and what needs to change, or in your opinion, what could be better done by those incumbent banks.
We have always been protective, and wherever they have to loosen up and allow other entities to come in, like the fintechs, they are protective about it. And with the regulatory environment improving, I think there will be a shift, and they will have to be more responsive to consumer needs. And the banking channel has to evolve and evolve to the needs of the market. And I think the time is right. The banks are responding. You see the regulatory institutions, they have also introduced reforms that allow them to introduce more players, and banks are also responding to it. So the bank's role has been conservative, but with time, I think they will loosen up with the way the market is moving. They will have to open up.
Misbah, I believe you're also part of, and you're an independent director at a bank in Pakistan. Would you like to defend the incumbents, or would you like to add some color on
it? Sure. Yeah, I am on the microfinance bank, but I will pass out as a banker, and not to offend any of my banker friends, but I'm so glad I made this decision to not be a banker anymore. I think the challenge is that the incumbents are sitting pretty. They're very comfortable. They're making money off of government lending, treasury bills. And there's no real push for them to actually, try and take more risk on. So yes, it's high risk, high return, but banks by nature are risk averse. And so the challenge has been, and this comes back to that push, that if the government is going to come in and take drastic measures and actually pass policies which will force banks to do it, I feel like incumbents have very little incentive, even though they're only just tapping, not even 15% of the market in terms of their reach. And we have a lot of initiatives around financial inclusion, and we see some banks getting into it because there's funding coming, there's support coming, there's an attention to this space. But I feel like one thing that really needs to change is that mindset. And that goes for both in terms of people at the banks and the management, as well as the space collectively. We have banking associations, we have all of the banks that are incumbent are actually the ones deciding and giving input on policy to the government, right? So I think to this point, there needs to be a lot more push, but I think people need to have start demanding those products as well. I think the change is going to come from the smaller banks, the ones that are potentially have the opportunity to become the challenger banks. The digital banking side. It's not going to be those large commercial banks that are going to be pushed. Even though we have banks saying that they're tech first and banks later, we'll have to see how that plays out. But I actually think that both in terms of the mindset at banks as well as the potential rewards for them, are not very strong right now. I think the other thing is that to the point that Mehboob I think was making earlier about wallets, etc. We've had wallets around for a long time. We really haven't grown out of the P2P and money transfer and bill payment. We need to start seeing, wallets, etc., engaged in more actual commercial transactions and buying and selling, which is when these will start taking on. And I think then banks will also start looking into it. But until then, it's going to be very difficult to move this. And I think it's going to have to come not from the large commercial banks, but the smaller banks, possibly the MFBs, the microfinance banks, the digital banks coming up, which will really come in and challenge the status quo.
That's an interesting point, and I think this is a great segue for us to talk about the opportunity piece. And I know Rabeel hasn't contributed on the panel yet, but I think he's someone who's been working as an investor in Pakistan for quite some time now, and been looking at the market. Sarmayacar, I also work there, so I know Sarmayacar has made one investment in fintech. But Rabeel, if you could just add some color on the opportunity in fintech in Pakistan, and where do you see the early adoption coming in, and how have you seen so far, or what areas you see the growth coming in for these for fintech products?
Sure, thank you, Mubariz. I do want to start by sharing actually one final piece of why maybe we have not seen that uptake so far is also maybe a little bit of the talent side. Many years ago, if you were looking to buy a traditional bank in Nigeria, they'd ask you, can we get the finance people from Pakistan? And you'd ask them why, because they'd like the NPL kind of trajectory tends to be very similar in Pakistan and Nigeria. And I think the reverse of some of that needs to happen, where, as Beau pointed out, there are playbooks of different segments that I think we need to bring into Pakistan, localize. And as we're seeing some of that de-risking happen, I think some of the investor capital will also flow, and hopefully that's going to create, again, give more opportunity for more solutions to actually be tested. What it feels like right now the market is operated as is fintechs are allowed to do whatever banks can also do, which is just really additional features, bill payments, etc. But nothing really beyond that. And I think what is going to in my mind, and this is the segue into opportunity, I think that's where the real opportunity is, where, as Faisal Aftab earlier said, a lot of that data flow, a lot of the transactions that facilitate additional financial services have now started happening, and they've been increasing over the last couple of years. They will continue to increase, and a lot of that data is used, for example, to make lending decisions. So what we're starting to see in the market are, for example, as people might have picked up, there's this B2B digitization wave of retail Kirana stores. Everyone wants to connect them to manufacturers. Now, once that data is starting flowing through these platforms, you're going to know different kind of earning potential and kind of spending patterns of a lot of these shop owners. Now, if you wanted to come up with some sort of a working capital line, some sort of a lending facility that leveraged that data, that would have not been possible. In fact, even now is only going to be scarcely possible. But give it a year or two of data, and I think then that finally becomes a possibility in Pakistan, which previously was just not there. Will a traditional bank be in a better position to capitalize on that? I don't think so, just because of how they are set up, and how startups are actually coming out wanting to leverage the work of others and the data that is now being made possible because of the digitization wave. So there's one element which is just now becoming possible, which previously might not have been. And in another case, we're also now starting to see adoption being driven by certain use cases, which previously were just not, there wasn't really an incentive for people to adopt. So to quote another example, one of our portfolio companies, Bikea, has tens of thousands of motorbike riders. Each one of those motorbike riders can collect money in cash or cards or payments, but their actual payments from the platform are paid out through one of two domestic remittance wallets, EasyPaisa or JazzCash. Now, in order to become a driver partner on Bikea, you actually have to come and download that app and start using it. So that's one more person who is part of a financial net. He has the balance on a wallet. And while they might be going out and withdrawing all of that in cash, it at least digitizes some of that cash, which can then be used for again, payments, etc. Where are those payments going? And to again give another example, social media apps, messaging apps, now with more and more digital payment options becoming available, people are using them to then move their consumption patterns online. Like Beau is this app which has become quite popular in Pakistan, where people are not shying away from paying 5 rupees to send a digital diamond. I didn't know this existed until a few months ago, but apparently there are millions of people doing that and using a Pakistani developed solution to pay for it. These are again small denominations, but are aggregating now over larger numbers. And ultimately, these are different tangential opportunities that I'm mentioning, but I think therein lies the crux. Whereas we need to look at each one of these subspaces within fintech separately, and we need to really think about are the ingredients there for them to take off, and if there are really viable, interesting opportunities that are backed by experienced founders, I think risk capital will also find itself towards those, and a combination of those together with the direction of travel on which we are in, with the regulator, with the authorities, I think it is really a question of when rather than if. But of course, timing could be everything in the space, and the pace at which we're seeing this change suggests that I think in the next year or two, we're going to really start seeing a lot more fintech opportunities. We haven't really even touched in short tech, reg tech. A lot of these sub-segments are also going to start coming up. And even though we've just invested out of our fund in one fintech company, whenever someone asks me, I feel like by the time we're done investing our fund, we'll be very heavily fintech invested. So fingers crossed a little bit, but I think that's really where we're seeing some of those niches emerge as opportunities.
Well, that's very interesting, and I was reading somewhere how pretty much everything will be fintech. I think it was some partner at A16Z who mentioned that, and you mentioned the data piece which is missing, which is one of the things that you mentioned was the data piece that's missing, which is what's keeping back fintech applications from coming in and actually being able to use data to make the decision. So Faisal, Aftab, sorry, Faisal, coming to you, where do you think, or where do you see the next segment, next industry where this data is available and where fintechs could come up and actually be able to deploy capital in or deploy financial services in a more data-driven manner?
Sure. Thank you. So, look, the base level is there, right? With mobile wallets, with EasyPaisa, JazzCash, and, just what we were saying with Bikea, ultimately, we have a portfolio company, BookMe, that went cashless a couple of years ago. We're relying on these rails, and people are using it if you give them an efficient product. But really the next wave is going to come in from your microfinance lending, nano lending. One of the things we rolled out on BookMe was insurance and pay as you go. So one of the existing telco wallets, they wanted to test out the product, and it's actually been pretty successful. People are literally paying if a bus ticket costs about 800 rupees, they're spreading it out over 10 days and paying 100 rupees at a time. But then they obviously have to set up an onboard with a mobile wallet. The next wave, at least what I see, if I was to kind of visualize in the future and our trajectory plays out correctly, is I think you're going to see a lot more of these pay-as-you-go type products, especially on e-commerce, as well as your salary advance platforms like PayActive in the US. You'll start to see a WageStream in the UK. Some of that will start to play out. And you can do it in a mitigated manner there, right? So versus the main issue is just lending to the consumer and collections. If you integrate with some of the payroll systems and you go through an employer, then your ability to collect kind of improves. So, things, I think everybody on the panel has kind of alluded to that. It's not just about launching any other tech platform. The losses here, NPLs can actually really, really impact the business and then subsequent round of funding. So that's, as founders come up and build platforms and think of these things, I think we're going to see more interesting stuff. I'm already seeing like a lot of, one of the interesting patterns that I'm seeing in Pakistan is to, answer, I think Rabeel had said something about the quality of people, right? I'm seeing people like leave essentially Morgan Stanley in New York and, in Goldman Sachs. I think one of the gentlemen here is from Goldman Sachs. But people like that, they're actually moving towards emerging markets and frontier markets. And so one of the platforms I'm currently looking at, it's an interesting team, a local person that's been in the banking industry and worked, did some fintech stuff, and then somebody coming from abroad and with their expertise and kind of essentially creating a new product. So interesting times ahead, but the one that always is the outlier for me is the microfinance lending play and the nano lending play. While you would expect for that there should be a huge demand for it. I just haven't seen any of those platforms, at least. Maybe it's probably at the algorithm level where our behavioral patterns are very different. When I look at India, the products have been fairly successful. So probably, 3-4 years out, if I had to project, where we'd be ready for that type of a platform. But I'm hoping I'm wrong. Hopefully it's next year, and I'll be the first one to invest if something looks appealing.
No, that's true. That's actually quite an interesting space as well, and because the scale that you can achieve in a country like Pakistan with nano lending products as well. So, Beau, what have you guys seen in similar markets? Again, referring you to provide the broader outside perspective. What have you seen in markets similar to Pakistan in terms of adoption for such products like Faisal spoke about, where in terms of nano lending or micro lending, what do you think is missing in Pakistan? Where do you think it's going? Do you think there's still room for this, or are there some other factors which, or like Faisal mentioned, their behavior patterns are different here?
Yeah, I mean, our experience with some on the microfinance and nano finance side really goes back to the early days of non-fintech in India. We backed a number of the early microfinance banks there when nobody believed in that idea, and they thought it was just philanthropic projects where we were, giving away money. How quickly the world changed within just a few years when, my business partner was investing into what became some of the largest microfinance banks there, and then all of a sudden Sequoia was in the next round, right? Like, so things change pretty quickly, and I think that's one thing I do want to lay out is that, it's going to happen gradually, and then it'll happen all at once, right? So just everybody needs to realize that it's just going to take one event, as was mentioned earlier, for things to change. And we've seen this happen in Indonesia as well. I mean, nobody wanted to touch anything fintech for a long time, and then everybody wanted to be in fintech. And then you moved into this realm of people throwing way too much money at entrepreneurs who really didn't know how to do what they were trying to do. And so I also think that financial services really takes seasoned people who have had long banking careers, understand how to talk to the regulators, understand how to build teams, do risks, do compliance, so that then you actually create a much smoother path. It's just going to be, are those experienced people willing to leave their corporate jobs and actually start one of these businesses? And I think that one of the things I've seen in Pakistan is that there are a lot of people who are really excited about this. It's been proven in so many other markets at this point. It's really just an access to capital play that I think will be the big game changer there. So be looking for a couple big investment rounds in Pakistan to bring foreign investors in, and a lot of things will change. Kind of talking the other side of the coin from what Faisal was talking about, really on the retail side, in more of the consumer-based approach. I agree that thinking about retail plays with consumers, can be kind of expensive. And I see some really interesting opportunities for bundling finance into the product as opposed to providing as Faisal Chowdhry was saying, with really this idea of getting them to use products that they're not used to. So if you can bundle the financial services product in with the actual purchase of a real product, you can probably, accelerate some adoption. But then one other thing I wanted to share was, I actually think there's some interesting plays for driving enough efficiencies for businesses to use fintech products that are not just lending or, digital payments. Like, we've seen some interesting things happen in Indonesia around tax filings. And I know everybody here is probably going to smile and say, yeah, right. Like, nobody wants to pay taxes in Pakistan, and anybody reporting on that stuff. So everybody used to say that in Indonesia 7-8 years ago as well. But, once you start getting the system going, and people realize there's enough value in actually reporting properly, or at least slightly reporting, that it's worth filing. That means you can get access to the formal financial system and get access to formal financial products as a smaller, medium-sized business. It really makes it worth it. And so that's going to be another regulatory dance. Is there some sort of a threshold that if you're underneath that, you don't need to file your taxes, or it's a low tax rate, to just get people into the system, right? And, we've seen people then offering things where it's like, hey, let's process your payroll more effectively, and then force your employees to actually launch small banking accounts, and then the banks want to actually get access to those customers. So I think that there's some things on more the enterprise side, whether it's, creating an ease of tax filings, whether it's payroll, whether it's, other ways where you actually adopt large numbers of users en masse, and you don't have to, spend a ton of money on customer acquisition, going out and, subsidizing e-wallets and subsidizing loans at crazy rates, or do P2P lending, which can be, fraught with some different challenges based on the different market. So, I think it's a really exciting market. I think that probably the part that's going to be a little bit tough is, lending businesses and fintech businesses often take significant amounts of capital. And, is there enough growth capital to fund those companies that go from, pre-A to A, and then you need the B. So you need to have some great teams that are building great systems that look like world-class companies, and then they'll all of a sudden get a $50 or $100 million financing round, just in the way that, some of these other business models like, Ikea and, Airlift and some other things have seen these big rounds, right? Like, that's what's going to need to happen on the fintech side, in my opinion, to really change the game. And or it's going to be an Alibaba wave, type of we don't want to just leave it there.
No, but a lot of interesting points made there. Mehboob, I think your hand is raised, and then I think I'll go to Faisal Chowdhry. You're muted, Mehboob.
The line dropped. So I'd just like to, so we've seen the banks being conservative, but then what are we doing about it? The government is wary of the fact, and there is budget reallocation where we are making soft interventions to encourage banks to lend in areas where they conventionally don't lend. Like improving access to finance for SMEs. We are providing markup subsidies in the province of Sindh so that banks are encouraged to lend. Then only this year, in the post-pandemic economic revival, there's a budgetary allocation of 700 million rupees for funding startups. But the challenge is to lend to these startups in a transparent manner so that we are compliant with the accountability regime which is within the system. So there are challenges, but the government, the public sector is very much aware of these challenges, and we are making soft interventions, and that's where we want to collaborate with the private sector so that you see with 2% success rate of startups, the public money going to such startups where 98% will not be successful. So we'll have to come up with solutions so that we, in a way, are compliant to the accountability regime, and at the same time promote these areas and encourage them. So there is effort. As we speak, 14 of Sindh government departments are being automated under a World Bank program, and this clearly shows that we are in the right direction. We are those 14 departments, their processes are being re-engineered, simplified, and automated. So all this will have a very positive impact in the development of the fintech industry. This was my contribution.
Thank you very much. That's very helpful. Faisal Chowdhry, I would like, and I think building upon what Mehboob said, that the push from the government, and I think other points of the panel, what was mentioned was that there's this one big event which brings about change, and I think COVID is perhaps one of them for bringing some sort of digitization of transactions in Pakistan. How do you see the Pakistan opportunity? And I know you guys are investing in Pakistan as well, through directly, indirectly. How do you see the Pakistan piece? Where do you see the opportunity here? And where do you see this push coming from, which would digitize these transactions, or at least provide opportunity in fintech?
Yeah, I mean, similar to some of the points that were made before. I mean, I think Beau used the word bundling, which is, I think, a great word. You know, like, for example, I think of Baiki as one of the largest fintechs in Pakistan at the moment, right? Those type of bundling opportunities are already there. And fintech doesn't look like fintech in another region or a country, right? The entry point is not necessarily important. It's digitizing and giving people access to be able to transact in a more efficient manner. I think that's one. I think two, when we look at the Pakistan opportunity and other opportunities, blocking and tackling is super important, right? So what Beau said, and I think someone else mentioned as well, like filing taxes, regulatory compliance, incorporation, getting all your legals right, all that stuff is super important, right? And so a lot of those basic things will also start to get digitized. And once you start to kind of create that ecosystem, where I think Mehboob was also suggesting as well, that's really important. That gives the foreign investor the comfort that, hey, I can come to this jurisdiction and I know what's going on. Right? There's some transparency around it, and I can get on board with that. I think that's the second thing. I think the third thing, in terms of the playbook, people are looking for assets, right? And so whether it's a firm like Morgan Stanley, Goldman Sachs, or all these international banks, and even local banks, people are looking for assets. And to the extent you're able to recreate that playbook in Pakistan, I think the opportunity is definitely there. We've done similar trades in India and Bangladesh and Africa, and the reason we've gotten comfortable is because they got the basics right. It doesn't have to be that innovative. It doesn't have to be that creative. It has to be efficient, and you have to get all of the basic blocking and tackling right, from your regulatory side, your legals, and your taxes. You get that right, and you'll see a lot more interest in fintech in Pakistan.
No, that's very true, actually, because and I think this is one thing that we can all have consensus on, is the fact that we don't really need some groundbreaking technology to come in and get Pakistanis to adopt fintech products. What we need is well executed products that are actually solving a problem. Given that our time's almost ended, I think I'll end it with Rabeel. Rabeel, what do you think are some of the steps that the government can perhaps take to encourage more and more people to either transact digitally, or either move towards a more fintech, or move towards adoption of fintech?
Sure. I think one thing we have to be cognizant of is, like, it's not the government's responsibility to be testing out different solutions that might or might not be taken up by consumers. I think that is really ultimately a function of risk capital, as Beau and Faisal said. And we need to, again, create the frameworks that enable a lot of that to happen. We've seen some of that movement already. Last year, we saw the EMI regulation come through. We're now starting to see, breakdown of the licensing requirements to fit really what a solution is trying to provide. So really what the government needs to do is to continue to move in that right direction. And again, get industry input, get input of people who have built these products, built these services elsewhere, and see how we can localize them and create the regulatory environment, the policy frameworks that enable that. And I think in doing that, there's also one very key thing that they need to keep in mind, which is not solve for incumbents. I think as was the case before, it's like, okay, there's this risk to them. It's kind of like on the telco side, if the Pakistani government is trying to solve for PTCL, the national kind of like, carrier or whatever you want to call them, that by definition will mean that actually it's not likely to be an efficient solution, because you really need to have an open competitive market to be doing that. So for example, if you give all the fiber that is to be laid out exclusively to PTCL, then you're going to see many decades before we can really see the kind of potential realized. And that's why I think, again, solving for particular existing use cases and incumbents is probably not going to be very conducive to seeing new innovative solutions come through. But the rest is, I think, really on us and on industry participants. I think it's the framework that is currently in place, the people who are actually in decision-making authority in some of these institutions. They are change makers, and I think we've seen Mubariz, you yourself have been involved with the state bank on many fronts. I think there are genuine considerations on their side as well, that they want to prevent widespread manipulation of some of these loopholes or treatment of these opportunities as loopholes. But I think we're moving in the right direction, and as long as we're consistent and don't let, I think some Beau mentioned before, we don't let too many large-scale failures to occur, in this space either. I think that's a responsibility. But otherwise, I think it's a matter of when rather than if.
No, that's very helpful. Thanks a lot, guys. We're out of time. I wish we had more time for this. I think we can we can add quite a bit around this. And I know there have been recent developments in crypto as well, where Pakistan is finally opening up to those opportunities as well. But either way, it's great chatting with you guys, and hope everyone listening found something insightful. Thanks a lot. Take care.